Hey guys, it's Gandalf here. I was just sat here looking at the markets, and I thought I'd record a quick little video just to go through what I'm looking at here for the market, and just make sure you guys understand what I'm seeing, and maybe you can make some smart decisions in the next few weeks as we navigate this tricky period in the market. So this is ES here. We're just taking a look um, over the last couple of years. So just having a look at the price action, and maybe some of you joined the market and joined the group around here, and you've only experienced this huge run up, or I think a lot of you joined around here in November, and you've only seen the market pretty much rip to the upside nearly every day or seemingly every day. But when we look back, this is the general trend of ES is obviously higher, but we see these periods of volatility, quite often here in 2015. I remember this one quite well. I actually think we're probably looking to do a structure similar to what happened in 2015. I'll talk about that in a minute. Um, I remember this one very well. Huge pullback. We ripped pretty much every day for about 2 weeks straight, and then we had within the space of a few days about a 15% pullback. And I remember this crushed a lot of people, many that were leveraged long. We ended up making another divergent high, and then we had a real pullback in late 2018 around Christmas. We actually bounced on Christmas Eve, if I remember rightly. And then you've all heard of COVID. This looked like the end of an economic cycle. Um, and really kind of reset the market and the valuations. And I think that's probably right. I mean, this looks like this bottom we posted here is the start of a new economic cycle. And what I'm expecting to see is at least three waves to the upside. But in between these waves to the upside, we'll have periods of correction. So if we look at what we've done so far, we had the start of the first wave. And with every kind of impulse wave, we'll need to see at least one pullback, or you can think of it as a flag. So we had a pullback here um, in around summer last year, and then we made the final kind of excessive move in that impulse here, and we topped out in September of 2020. And what you usually see with an impulse wave here is you make the first peak, you make the second peak. So there's usually three sets of waves. So we got the first wave there, second wave there, and the final wave here. Usually, what you see is divergence in the RSI. So usually, what you're looking for is the last wave to have some bearish divergence. So I'm assuming many got short the market around here. If I remember rightly, this was around the time where they announced the success of one of the COVID vaccines, and we ended up having a short squeeze followed by a huge correction. And corrections happen in sets of three waves. So we usually have an ABC type structure, which is exactly what we had here. These ABCs can look in many different ways. They can end up becoming triangles. We can see huge, larger pullbacks with two lower lows. Or we can trade a flat, and that's kind of what we did here. We ended up trading a flat for this correction. So that was the first wave that we had, and then we've started the next wave. So here, like I said, you need to see at least one pullback, and I think we've seen that pullback here. We had an ABC structure kind of pullback, and then followed by the divergent high. And you can kind of see that we've got a high here and a high there, and we can see that kind of divergence in the RSI. So this time they didn't squeeze the divergent structure. We actually made the high there. So we're expecting a similar thing. We need to see an ABC structure on the higher time frames before we can think of this correction as over. I mean, this period here, start of September, we didn't make a new high until November, so we're talking 2 months. So I wouldn't expect this to be over, in any sooner. So we're talking about from end of February to probably the end of April. So this whole period here is likely to be part of this corrective structure. So what I'm hoping to see is something like that, right? So how deep do we pull back usually in these corrections? And usually it's at least one fib level. So we can see here from the first impulse, we pull back, just over one Fibonacci. So we'll put this to the new top that we've made. I'm thinking a similar area. So I'm looking at this area here as being an interesting area to go pretty heavily long again. And if we look at just with this impulse alone, that corresponds to around 50% retracement. Maybe we can head lower to the 618, see where this 200-day moving average comes up to. By the time we get there, we're probably around the same spot. So this is around 3,500 in ES, and that's has been my target for some time. I prefer corrections that look like this. It's harsh and it's painful, but it happens quickly. What we've got here is something a lot more painful actually. And let's just lower the time frames down to the 4 hour. What we've got here is something very painful. There's a lot of denial that this is even happening, and we're seeing that in the price action here. So we've got what looks like a megaphone structure, and what that basically is it's just expanding volatility. So this has been a buy the dip market for some time, so we're still seeing this buy the dip behavior. Just this time these dips are getting sold off, and they're increasingly getting sold off a little bit faster each time. So we're seeing another trend line develop here, and maybe you may see another steeper trend line here as well. And I think we're going to see a really painful structure here. And remember, our downside targets are around 3,500. So we may see some more range behavior. I think maybe we've probably made a peak here actually in the future session. But maybe we dip a toe. Maybe we don't go all the way down, but maybe we hit just underneath this low we made last week. We make another bounce, but this time we make another lower high, and maybe this is the final time where I guess the bulls give in. The denial becomes anger and acceptance, and we get that final kind of capitulation down to these levels, and that's where I'll be looking to load up, and maybe I may lighten what I already have actually this week in preparation. So that's what I'm thinking is down the corner, and I won't be desperate to buy that level if we get there. You never know where this is going to end. We'll probably make a bounce, and maybe we'll head back around here again. So you may get a second opportunity to buy these levels. So don't be too desperate to deploy all your cash around these levels. We're in for, like I said, a 1 or 2 month difficult period. But the good news is, and I can talk about this at a later date, I think this summer we're in for a third kind of final bullish wave that should be interesting to trade. Okay, let me know if you have any questions. Thanks.